Hey, it's Dan Morales, and this is Homebuyer Radio, episode number 50. Hey, this week I wanted to talk about multiple unit properties, okay? That would mean a property that has, let's say, 2, 3, or 4 units, okay? Maybe it's a duplex or a 3-flat or a 4-plex type of property. How do mortgages vary when you're looking at those types of properties versus maybe a single-family home, okay? The first thing that you'll want to note is the options that you have for a multiple unit property. Now, we're talking about you buying it as an owner-occupied property, meaning that you are going to live in this property as your primary residence. It just happens to have more than one unit, okay? Maybe it's a duplex or, a 4-plex or a 4-flat. So let's talk about that. What does that mean? What are your options and how do you qualify? A couple of quick things to note. The programs can vary depending on income and if you will, credit and so on. And what I mean by that is when you look at, let's say, an FHA type of mortgage, FHA will allow you to do a 4-unit property, if you will. They'll actually allow you to do it with the minimum down payment. Now, there are a couple of criteria that go into the mix there. First one being that, you have to be able to show that the property is self-sufficient. And what I mean by that is that it generates enough in rent that it could cover the mortgage payment if it needed to. If that can't happen, then the loan amount that you're able to get on that specific type of property gets reduced until the cash flow that property generates is sufficient enough to service the mortgage debt tied to the property. What I found in my experience when I've done a number of these properties, usually what's going to happen is in most cases that property will generate enough cash flow that you can typically be able to finance it using the absolute minimum down payment with FHA. That is a really aggressive way to be able to buy a multi-unit property without having to have a significant down payment into it. Okay, so that's definitely a really good option for somebody who's looking to buy a multi-unit property, owner occupied, but you're maybe not going to maybe you're not going to. You're going to rent out the other units is what I meant to say. If you look at it from a conventional basis, if you're looking at a conventional mortgage, there are some different ways that this can split, if you will. Both Fannie Mae and Freddie Mac have an affordable housing product that's aimed towards folks with what they would consider kind of a low to moderate income or, maybe a median income for the area where the property is located. In those cases, the down payment requirements for a 2 to 4 unit property are not quite as stringent as what they would be under their standard program. So meaning that there's, usually a little more flexibility with down payment if you are eligible for one of those programs. Challenge with those programs is just going to be your income, right? The income that you have, if it exceeds a certain threshold for where the property is located, you may not be able to use that program, which means you may have to use their standard conventional program. When you look at the standard conventional program, those down payments for 2 to 4 unit properties start to go up significantly versus the additional flexibility that you would get under, the home affordable or home ready program that Fannie and Freddie do. Okay, the absolute smallest down payment typically you're going to get away with on a multi-unit generally is going to be on an FHA type of loan. It's actually, I think, probably one of the easiest ways to qualify for a multi-unit property. Like with every mortgage options, there's pluses and minuses to it, right? So it's really just a matter of, what are your individual circumstances. The amount of mortgage you can get for properties that are 2 to 4 units is greater than what it would be if it's a single family home. So what I mean by that is the threshold or the cutoff for a mortgage, the maximum mortgage amount you're allowed to get goes up based on the number of units that are tied to a property. So if you're looking at a 2 to 4 unit property, those of course properties can oftentimes be more expensive and probably should be than a single family home. But the amount that you can borrow and still be eligible for these programs, can increase as well too. And that's especially important when you get into certain parts of the country where, there may be higher cost areas, where property may be located. Okay. So if you're looking for something like that, you're thinking, gosh, I'd love to buy a multi multi-unit property because I'd love to maybe have somebody make a rent payment and pay the majority of the mortgage for me. That's something that we've done tons of these, so we'd love to help you out. Again, my name is Dan Morales. My NMLS number is 709729. You can reach me at 616-931-4629. Again, 616-931-4629, or you can reach me at dan@danmorales.com. That's DANMORALEZ.com. And again, North Point Bank is an equal housing lender.